We've had some of the big Mag 7 companies reporting this week. We will expect some others to report next week and after that. So let's talk about what happened with Angelo Zino. He's equity analyst and senior vice president at CFRA Research. Thanks for joining us today.
Thanks for having me.
So Apple had an iPhone blowout. The i17 is doing really well. Still, stock is down. So what are investors seeing that they don't like?
Yeah, I mean, I think when you look at Apple's numbers, I mean, they were absolutely fantastic. You pointed to the iPhone numbers grew, I think, 23% year over year. It was the best number that we had seen since the iPhone 12 cycle when, everyone was dealing with a pandemic, and we had the 5G cycle where they actually increased prices by about $100 on that side of things. But you kind of look here this quarter, I mean, it's fantastic. The guidance was really good, better than expected, both on margins as well as revenue. I think the concern from the street right now is some of the pressures on the memory side. Apple obviously doesn't give a guide past the March quarter, but they did hint at the fact that, hey, listen, memory pricing is going to have more of an impact after that March quarter. So they're dealing with some of the constraints very well right now. They're actually somewhat constrained their own selves for other components just because the demand is so strong for their, for the iPhone. But nonetheless, I mean, I think it largely has to do with some of the memory pressures, as well as the fact that you're going to bump along tougher comparisons as this year progresses.
Okay, but producer just mentioned that they did squeeze out a win in the end of the day. They're up like $1 today. Okay, you still have a buy rating for them because you think what they have in the pipeline, like the partnership with Google, will really benefit them?
Yeah, I mean, I do think AI is going to be a big story this year. I also like the fact that the free cash flow now has improved versus where expectations are because of the pent-up demand here that we've seen on the iPhone. As long as they can sustain some of this demand or the higher revenue trajectory, we really like it. I mean, they're going to give a new shot, an update to their capital allocation program in late April, early May. We expect a boost on that side of things. And then, again, the AI story we'll get more clarity on, especially as we get into the developers conference here in June. And then as you go to the fall, you're looking at potentially a foldables device launch alongside, a greater AI story there. And on top of that, we'll see how they handle the memory story. If memory prices go up as much as they potentially are indicated to go up, they can always adjust pricing, potentially by $50 or so.
Microsoft also reported stock started to sink right after that on the same concerns or something else here?
Yeah, as far as Microsoft is concerned, I mean, they were a little bit light on the Azure side. It actually beat our numbers. I actually think high 30s growth for Azure is still a fantastic growth number. So I think the street nitpicking a little bit. OpenAI obviously now becoming a bigger portion of their bookings. I think that spooks the street a little bit. You're talking about 45% of their bookings coming from OpenAI. But I think what's also important is 55% or north of $300 billion of their bookings is not OpenAI. And that business, on that side is growing about 28% on a year-over-year basis. So they are seeing some nice growth ex OpenAI, but the fact that they did highlight that large OpenAI exposure, I think spooking the street a little bit. But we would actually tell investors to be buying on this dip, given that the north of 10% decline that we've seen here over the last 2 days.
Okay, let's get to Meta. Going big, of course, on CapEx spending. We knew that. But do you think they're seeing some ROI now from curated ads on social media? Are they benefiting already?
Yeah, they absolutely are. I mean, you look at the guidance there for the March quarter, essentially at the midpoint, about 30% year-over-year growth. I mean, they are clearly monetizing AI at this point in time better than anyone else. I mean, we'll see what Alphabet has to say next week. But as far as Meta is concerned, they are doing an absolutely fantastic job. Obviously, it was a great quarter for them to significantly bump up their CapEx and OpEx number for the year. And I think it also kind of, the wide range puts in a worst case scenario where they're not going to have to tap the street again and say, hey, listen, we're going to have to increase spend. So they're set up pretty well here in 2026. But they do have to still deliver as we progress through the year. From those hires that we saw last year, we do need to see some new LLMs come out, and we need to see them really kind of hit a home run there with the developers.
Google, as you mentioned, will report next week, which follows the November launch of Gemini 3. Is Google winning the early AI race with Gemini?
Yeah, I mean, I think they are. I mean, we'll see what some of the updated user numbers are next week, the usage numbers, and how they're monetizing Gemini at this point in time. But all indications right now is they're getting significant momentum from Gemini 3 here. And then, they can obviously kind of throw that across their entire ecosystem and really benefit on that side of things. So we think next week is going to be we're going to see some great numbers out of Google, not only from what they have to say about Gemini 3, but also as far as the cloud momentum. We're looking potentially mid-30s growth, which would be slightly above where expectations are. And then I think Azure and search, I think YouTube and search also does very well.
Okay, I've got about a minute left, so let's get to Amazon quickly. What are you expecting from Amazon?
Yeah, so our analysts actually, again, it's going to be all about the AWS business. It has been here. That's been the case here for the last couple of quarters. And, I know there was a slight miss on Microsoft's side of things, but our analyst is looking for a slight acceleration here from AWS. If they can demonstrate that, I think you'll get a different story and reaction to the Amazon numbers relative to what we've seen here from Microsoft. And not to mention, it is a slightly easier bar for Amazon to beat relative to what Microsoft has had to go against.
Angelo, got to leave it there, sir. Have a good weekend, and thank you very much for giving some of your time to us today.